Alright, here's an introduction to Forex trading in less than 15 minutes, and it includes examples. Let's go! Like I said, it's going to be a very short story, and here's the table of contents. I'm going to start with the introduction, and then I'm going to head on straight to telling you about Forex, and it's going to be a wrap. That's it. Alright, what is Forex? Forex is derived from the words foreign and exchange. I'm sure you've heard of this, foreign exchange. And it's the exchange of currencies, which are financial instruments, and the word currency is derived from the word current, which means right now. And the reason behind that is because the value of any currency is always changing, always fluctuating, and by that I mean that it's always going up and it's always going down. So, in a nutshell, Forex, which is foreign exchange, is actually the comparison and exchange of currencies against each other. And exactly how is money made from that? Very simple. I'm sure you've heard this 1,000 times. Buy low and sell high. Okay. Let's just park that idea for a couple of seconds and let me tell you about me. My name is Unported, aka Poster. I'm the CEO of PosterTrades, and I'm not going to say much about myself. You can find out about me on social media. If you want to call me, here's my number. If you want to email me, there's my email address. And if you want to find out more about what PosterTrades is, just head on to www.postertrades.co.za. Peace. So back to our story. How do we make money in Forex? Like I said, buy low and sell high. Simple. Okay, let me elaborate. Let me tell you a little story. Imagine going to USA for a month. Yes, that's right. You prepared to leave all of this. Cool, no problem. Bon voyage. You pack your bags and you hop onto the nearest plane and off you go to USA. For some reason, your flight says British Airways on it, but that's none of my business. So inside the aeroplane, they decide to have a lucky draw, and guess whose ticket number comes up? Congratulations, you just won $1,000. Yay! No, I meant yay. But now, when you left South Africa, $1 was worth 12 rands. But in actual Forex terms, this is how we say it. USD ZAR was trading at 12.00000. Fantastic. And when you returned, $1 was trading at 14 rands, meaning that either the dollar got stronger or, I know. Right now, you're probably like, what? Okay, cool. Let's also park that idea for a couple of seconds. No, the parking lot being empty does not mean that we're gonna park a lot of ideas in it. It's just a coincidence. All right? So let's go. Remember what I said, my definition of Forex is, it's the comparison and exchange of currencies against each other. Cool. So the question right now should be, how many currencies get compared to each other at a time? So by the virtue of that definition, we're only going to compare two currencies at a time at any given time. So that means that whenever we talk Forex, it's always about a pair of currencies. Yes, that's right. Two. Dos. Pedi. Mbili. Remember what I said, my definition of Forex is the comparison and exchange of currencies against each other. So by the virtue of using the words comparison and exchange, that means that we're going to be talking about comparing or exchanging two things with one another. And guess what those two things will always be? Of course, currencies. So that means that in Forex, we always talk about pairs of currencies. For example, we might be talking about United States dollar versus the South African rand, or the euro versus South African rand, or the euro versus United States dollar, or the Great British Pound versus the United States dollar. And these are just 4 examples, but you could literally have any pair that you can think of. Any. This is just a handful of examples, but in reality, there are hundreds, if not thousands of pairs out there. And by the virtue of these currencies coming in pairs, it's pretty obvious, but I have to say it, that you're always going to get currency 1 on the left and currency 2 on the right. And remember what I said? A currency is always fluctuating in value, meaning that its value is always getting stronger or weaker. And that simply means that if the value is stronger, it has increased. And if it's weaker, it has simply decreased. Let's take a seesaw for example. We all know how this works. But instead of putting one child on the left and the other on the right, let's put currency 1 on the left and currency 2 on the right. Now let's assume that currency 1's value got stronger than currency 2. And let's use the analogy that the weight of currency 1 just got greater than that of currency 2. That means that our seesaw is going to go down on the side of currency 1 and up on the side of currency 2, right? Guess what? That's exactly how a chart also behaves. If currency 1 becomes stronger than currency 2, the chart goes upwards. And in Forex terms, we say that it becomes bullish. And the opposite is also true if currency 2 gains strength over currency 1, meaning that currency 2 becomes stronger than currency 1. The opposite will happen. If currency 1 is weaker and currency 2 is stronger, then the graph will go downwards. And in Forex, we say that the graph is bearish. So yeah, that's how graphs go up and down. Let's take one step back and take this concept of pairs closer to home. Remember I said this is what a typical pair looks like. Let's take a closer look at the building blocks those make up a pair. Like I said, you've got currency 1 on the left, but I kind of lied. It's not actually called currency 1. It's actually called the base currency. And that is because there is always one of it. It does not change. I'll elaborate this point in a minute. Then on the right, we have currency 2. And I lied about that too. Its actual name is actually the code currency. And the reason behind that is that its value is always changing and fluctuating. Just hang with me for a second here. There's a very important point that I'm trying to make. Did you know that we are always participating in Forex activities every day? Let me show you something real quick. This is our pair, USD ZAR. Did you know that this is also a pair? Bread versus the South African Rand, or bread versus the USD, or a loaf of bread versus the Euro. Let me show you how it works. Here it is, right? Bread versus the Rand. Let me give you this example. What was the price of bread in 2002? I don't know. I don't remember. Probably like 6 rands or something. And what was the price of a loaf of bread in 2012? Probably like 9 rands or something. And how much is it now in 2019? 13 rands, right? Cool. So what does that mean? So that means that there's always been one loaf of bread, and the amount of rands that you could buy it for has been gradually changing over time. Keyword being changing. So you see, on the left, we've got what I can call currency 1, which is a loaf of bread. And there's always one of it, is the base currency. On the right, we've got currency 2, which is the code currency, which is always changing, always fluctuating. And if I can jump on to the next example, petrol versus rands. In 1992, how much was a liter of petrol? 1 liter of petrol. Guess what? This analogy can be applied over any pair that you can think of. It could be the Euro versus the ZAR, or the United States dollar versus the South African Rand. Alright, so let's go back to our story real quick. So when you left South Africa, you went to the bank and you bought $1,000 to use as pocket money on your trip, right? And at that time, each dollar cost you 12 rands, meaning that all in all, that $1,000 cost you 12,000 rands, right? Cool. But over the period of that month, something happened to the USD and it gained strength, and its price actually went up by 2 rands, meaning that when you returned, that $1,000 that you bought for 12,000 rands was now worth 14,000 rands. Because like I said, $1 was now worth 14 rand. Because the price of the dollar literally just shot up against the rand from 12 rands to 14 rands, right? Yes, the dollar went up in price from 12 rands to 14 rands over a month. That's my story and I'm sticking to it. So that means that when that happened, you made a profit of 2,000 rands just by going to USA. How nice is that, right? Now, that, my friend, is Forex. But whoa, stop the lorry. That's actually trading Forex the hard, long, and expensive way. Think about it. How much is a hotel room in USA for a month? And what about a return flight ticket from South Africa to USA? How much would that have cost you? And how much would you pay for groceries that will last you a month in USA? And to make matters even worse, under normal circumstances, it will take the dollar way more than a month to gain 2 rands value over the South African rand. No offense, but you see, that way of trading Forex is not very practical or feasible for an ordinary everyday person like me or you. So how do we do it? So let me show you how we trade Forex every day, Monday to Friday, without even leaving our homes. We work from anywhere via our laptops or cell phones. We use a trading software called MetaTrader 4 or MetaTrader 5, also known as MT4 or MT5. And this is what a typical MT4 chart would look like on a computer screen. Let me walk you around for a couple of seconds. You see up there on the top left corner, that is where you will always find the pair that the graph represents. And our timeline always sits at the bottom. And you will always find the price range, which is also known as the exchange rate, at the right hand side of the chart. And it belongs to currency 2. Because remember, it is currency 2 that is always changing in price, while currency 1 is always the same. And the graph itself represents the price fluctuation of currency 2 over history. It basically shows you how much it would have cost you to buy one of currency 1 if you had currency 2 in your pocket at any given time in history. And it goes without saying that the graph belongs to the code currency, which is currency 2. So let's go back to that important question again. How do we make money in Forex? And like I said, the answer is still the same: by buying low and selling high. If you've seen a Forex graph before, I'm sure you will agree with me when I tell you that price will never trend up like this, nor will it ever trend down like this, but it will trend up and it will trend down. What is this trend that I keep referring to? Let me give you a clue. It's got nothing to do with social media and it's got nothing to do with fashion. The definition of a trend, by definition, an uptrend is when price moves, creating a series of higher highs and higher lows, generally going upwards. And this is how that would look. Price moves up and creates a high, and then it moves a bit lower, creating a low, and then it moves higher, creating a higher high, and then moves low, creating a lower high, and then it moves higher, creating a higher high, and moving lower, creating a higher low, and it carries on doing that, moving higher and lower, but generally moving upwards. So what do we do in an uptrend? We look for buying opportunities. We want to buy when the price is low in an uptrend, and this is how that looks. Remember, price goes up, creating a high, and then it moves down, creating a low. And then there in that low, we look for certain things. Those will give us buying opportunities. And then we find opportunities to buy and allow it to go higher. And if it goes higher, then we're going to be in profits. Then we ride the uptrend, making profits. And if it happened that we missed that, or we want to take another opportunity, we wait for price to go lower again and look for more buying opportunities and do the same thing basically over and over and over. Every time that the price is low, we look for buying opportunities in an uptrend. And this is how it looks on an actual MT4 chart. Like you see up there, the pair is GBP JPY. We've got an uptrend, and those yellow circles show that every time the price creates a low, we have buying opportunities. And then what is a downtrend? By definition, a downtrend is when price moves in such a way that it creates a series of lower highs and lower lows, generally moving in a downward direction. This is what it looks like. Price moves low, creating a low, and then it moves high, creating a high, and then it moves lower past the previous low, creating a lower low, and then it moves high but not passing the previous high, creating a lower high, and then it moves even lower, creating a lower low, and it moves high again but not passing the previous high and creating a lower high. And then it carries on doing that over and over and over again, generally going downwards. And again, how do we make money? We buy low and sell high. And in a downtrend, guess what we're going to be doing? We're going to be looking for selling opportunities. We want to sell when the price is high in a downtrend. So this is how that looks. Like I said, price moves down in a downtrend, and then as it moves higher, there are some things that we're going to be looking for so that we can find a selling opportunity. and then that's basically what we're going to be doing over and over and over until our downtrend ends. And every time we get it right, we're going to make profit, and every time we get it wrong, we're going to take a loss. This is how a downtrend looks in an actual MT4 chart. As you can see up there on the top left corner, we've got our pair, which is GBP JPY again, and as you can see, the price is generally moving downwards, and as you can see in the highlighted portion, the price is generally moving downwards, but in those yellow circles, those are our high prices where we look to sell high in a downtrend. All right, we've reached the end of the presentation, and this is what we've learned so far. We've learned all this stuff which we are not going to read because we've got pictures to show us. Like number 1, South Africa is a very beautiful place. Number 2, currencies come in pairs. Currency 1 is on the left and it's the base currency. Currency 2 is on the right and it's the code currency, which is always changing, and its price is reflected by the graph. Yes, that's right. The graph belongs to currency 2, and currencies have fluctuating strengths, and the graph responds to those currency strengths like a seesaw. Another thing that we learned is that we can trade Forex from anywhere via our laptops and via our cell phones. An uptrend is a series of higher highs and higher lows and generally moves upwards, and we look for buying opportunities in an uptrend, while a downtrend is a series of lower lows and lower highs, generally moves downwards, and we look for selling opportunities in a downtrend. And guess what? Here's our favorite point. Money is made by buying low and selling high. Now you see, this is Forex. And I'm sure you'll agree with me when I say trading Forex this way is way easier, way cheaper, and much more convenient compared to that first example that I showed you earlier. So yeah, that's it. That's the introduction to Forex trading in less than 15 minutes, including examples. If you liked this tutorial and would like to see more tutorials like it, why don't you just become a member? Join PosterTrades today, where we will give you many more free tutorials like this one to get you through the beginner level of trading Forex. And if you want to take things to the next level and start making money, you can take our paid intermediate and advanced programs. Those you can learn at your own time, your own convenience, and your own pace. But that's not all. You will also get a weekly live mentorship session, either via Zoom, video conferencing, or GoToMeeting, also from the comfort of your own home. And we will throw in our live trading signals from our elite trading team. And as if that's not enough, we're going to give you a chance to join our referral program, because we highly discourage you to trade money from your own pocket. Therefore, we want to help you fund your trading account with at least $3,000. So if that sounds like something that you'd like to do, you can go get more information on our website, PosterTrades.co.za, or connect with us via Facebook, Instagram, Telegram, or get in touch with me directly via my WhatsApp on 071 207 2180, or call me directly on 061 796 4356. And that's it from me. My name is Poster. Thank you very much for your time. I love you guys very much. Please share this video, and peace.